What is up, everyone? Once again, welcome to another Thursday night class. So tonight we are going to it's kind of like a recurring theme that I've talked about throughout multiple classes in the past. So for some, it may be repetitive. For others, it may be stuff they want to hear more about because it doesn't stick the first time you hear it. So we're going to dive into the topic of how to be consistent long term. I feel like a lot of people, social media, I'm not going to say all mentors, but many mentors that teach classes, they're focused on helping people now. And then it's kind of, let's move on to the next group. I want to really help you guys understand like the long-term vision, the stuff that not many people teach because they don't even understand it themselves, or they can't really mimic what they teach to make it look like they're basically showing you what they teach. So the whole purpose, the entire topic tonight is literally, where do you see yourself not even months down the road, but years down the road, not just with trading, but like in life in general. A lot of people trade for different reasons. Some people do it for a passion. Some people do it for the freedom. But end of the day, we all are actually doing it for one sole purpose. And that's obviously financial freedom, or at least the money that comes with it to help in life with whatever the case may be, family, financial stability, be able to do stuff on your own time, be your own boss. Everyone is literally trading for like the overall same purpose. So as we dive into this, like I said earlier, Emilio's going to pop in a few minutes and just give his insight. He's one of the best traders in Rippy Global. He's been here for years, so he's got the experience. He has the results to prove it. He doesn't just talk the talk, but he's showing you guys the walk he's doing almost every single day. So when he does end up talking, ask questions for him and be active if you want to, because he doesn't come in here very often. So this is honestly a very big thing for you guys to hear when he starts talking.
I could chime in now if you guys are ready.
Yeah,
Um,
go for it, man. Go for it.
so I've been trading, like if you don't know much about me, I've been trading for about 3 years now. I actually followed Hassan back from the TCX days with Kevin and all of them. And when I first started trading, I was making a lot of money. I was making a lot of money in my personal life through my business. I do real estate and mortgages. So just in my, regular job, I'm making close to anywhere between 200 to 300K a year. So for me, losing, 20, 30K annually wasn't really a big deal. But I actually wasn't losing either because I was sizing in heavy and I was making anywhere between one to $4,000 a day. Then when the market started to get choppy and reversing around, I lost all my gains and then some. So when you see my account name and it's called just break even, I'm trying to break even for lifetime, because lifetime I was probably down at one point close to like $60,000. And a lot of it was just being reckless, treating the stock market like it was a casino. Like, because what do you do when you're at a casino? You're at a blackjack table, you get kind of hot, then you lose it all. And what do? You go to the ATM and withdraw more money and end up losing that money because the house always wins. It was very similar to that, to where you're trying to beat the market makers, and I was treating it like a casino. The biggest thing that I can say that changed with me personally was changing my psychology. Like, I know Nick has talked about it a lot, reading books, educating yourself, because you can read tape, you can make your weekly, daily, monthly levels, you can read a 4 hour chart, a 5 minute chart. But if you're just in here thinking like, I need to make $1,000 today, that's you're just going to dig yourself into a hole, because it's not going to happen. It may happen one day, like you just might get lucky one day, like maybe you bought Microsoft on Tuesday and you bought calls and then it ripped up from 345 to 360, basically based out of luck. Like, let's be honest, they came out with some AI news and the stock jumped $15. Was that because you charted it? Probably not. You just might have gotten lucky. So it's also being aware that you get lucky sometimes and sometimes you get unlucky also. Like, you might have Boeing stocks, he calls, and then the plane crashes and then you just lose everything. You just don't know sometimes. And so managing your risk is key. Like, if you know I'm going $1,000 into this trade, I'm risking 20%, I'm risking $200. Just before you even hit confirm and send that trade, are you just ask yourself, am I okay losing $200? If the answer is yes, then take the trade. If the answer is no, and you know that that $200 is going to ruin your day, ruin your week, impact the way you treat your loved ones, then just don't trade at all. Just take a break. take a week break, a day break, a month break, whatever it is. You have to get your psychology right. And then you do the homework as far as taking levels, reading tape, everything that, Rippy Global is, incorporating with Mitchell, incorporating the new Apex. Like there's so many resources that you guys can use that I didn't have available to me, or I should say, I just didn't know they existed. So one thing that I could say is just get your psychology right, because there's days where I'm happy making $100. I'm happy making $1,000. They a win is a win. That's the biggest thing that I've changed my mindset. Is green. Doesn't matter. It could be. I much rather be happy with a $75 green trade than be chopping around for 2 hours, wasting my day, wasting my mental capacity just to exit the trade break even or at a 10% loss. So what has helped me the most is just learning how to detach myself emotionally to the money. Once I get to that point, then I do the homework. Then it's time to do the homework. As far as when you saw my withdrawal this last week for $24,000, it didn't again, it didn't happen overnight. Even at $24,000, even though I started that account in June, I don't even want to say that happened. It was a 2 month time frame. That was a 3 year time frame to get where I'm at today. I just really want to emphasize for people, this is not going to happen overnight. You're not going to make your money back. You're not going to double your money overnight. If you're just in it to like, I want to double my money, that's great. Like we have a lot of people here who can help you do that. But with that being said, you have to learn the risks before you just start throwing your money into it. I've had, certain people within the Discord reach out to me struggling with certain trades. And I've been helping, talking to them, saying like, well, why did you take this trade? What did you see? And once they show it to me, I say like, this is where, you may have made a mistake because you were buying right out of resistance or buying calls right out of resistance. You're just getting that FOMO. And again, what is FOMO? That's just all part of your psychology. Once you just fix your psychology, I cannot emphasize this enough. It's gonna make you become a better trader. Look at Hassan. Yeah, of course Hassan is trading with a 200, $300,000 account, but again, he'll be happy with the $5,000 day sometimes. Of course, he'll make $30,000, $50,000, but there'll be times where he's also down $20,000 at one point, but he's able to fix his psychology over years and years and years of training, and now he's able to realize like, I know like what my risk is. My risk is my risk. And but he has his mindset right, and now that he has his mindset right, he's able again to do the homework, and he lets his trades play through. So that's all I can emphasize enough. Like, the 24,000, I wasn't green every day. I would probably say like I was red 20% of the time, but I managed my losses. It was a 10% loss, a 15% loss. 20% loss is typically always my max, unless it's just an absolute lotto. But because of that, because I'm managing my expectations, managing my mindset, managing my money, I'm able to let my contracts breathe over time now. And now I was able to double my account and then some. I was actually able to turn the $20,000 account into a $50,000 account. But I lost the other five or six actually, and so 30,000 of profit went to 24,000. But that's still okay because I would have been happy with 4,000 of profit over a month in time span. But that's because I managed my risk. So I just want everyone to know, like, there are days where you're just like, shit, like I feel like I just took a trade, and as soon as I took, like, I'm down 10% immediately. If that's the case, sometimes or like you emotionally to the point where you feel dumb, you feel defeated, just take a break. There's so many trading days. You're not going to win all of them. So if you get defeated sometimes, then just take the L. Take the L sometimes, because you know what tends to happen is then you overtrade. Then you're just like, you do exactly like you're at a casino. You go back to the ATM, go get more money, and then you end up losing it. So that's all I can emphasize as far as what's helped me become a better trader, other than just doing all the homework, creating my levels, learning how to retain, is just fixing my mindset, learning when to take it out, learning when to be happy with profits and just walk away. Because sometimes I'll make my daily profit expectation within the first hour of the day and I'm done. Computer's off. That's it. I'm happy. I'm happy with my profit. Because what used to happen was, oh, I already made $500. Let me make 500 more. And then guess what would happen? I would lose that 500. And then I probably end up losing 500 more. And then I'm down 500 for the day. So I literally just, in theory, lost $1,000 when I was green on the day. So that's all I can really speak to right now, before I have to head out. Because I'm speaking also because I've had several people DM me kind of down in the dumps. And what I emphasize is just take a break sometimes. You're not going to win every day. Just fix your mindset, get your mindset right. And to be honest, I'm usually always here. Like, you guys are always free to DM me, recap a trade, say what did I do wrong, or even say like, hey, I'm testing this theory out. And I'll tell you like, yeah, I think you're right. I mean, you could even ask Nick. We text back and forth, not every day, but on a weekly basis about trades. And we joke, but it's honestly true. Most of the time when we text about trade ideas, they usually go 100%. And it's also because we're asking for help. Validate me. Do you see what I see? And there's no problem asking for help in this game. It's always good to ask for help. And I will never hoard my knowledge or my information. There's no point for me to hoard whatever I know. If you guys ever want help, I'll give you what I know. And I don't even know everything. I'm still learning at this day. I still am shit at reading tape, but I'm still learning. Like, I ask Mitchell and I ask Hassan for help every now and then, because just to see what they see. It's never going to do you any good acting like you know all the answers. So that's all I wanted to just chime in. I wanted to let Nick, do his thing, but I just wanted to give you guys my perspective because I had a good couple months. I know I've actually had a pretty decent year, and I just want you guys to know that it is possible. I'm just not lucky. I'm not special at all whatsoever. I'm still, and relatively new to this, even though I've been doing it for 3 years. There's people who've been doing it for 6, 5 years. And, so I do find myself still new to this game. And that's why I'm still learning and I'm still even asking for help. Just never be afraid to ask for help because, like I said, I'll always be here. I know Nick is always at your guys' expense too, for knowledge. So, and he's always more than willing to help out. So is Hassan. So is Mitchell. So yeah, that's all. I just wanted to give you guys my 2 cents.
And Emilio, if you don't mind, I got one thing I want you to say, just so people understand. This money didn't just happen in like a few weeks, but what's your average position sizing?
So when I was trading a $20,000 account, I would always do my absolute best never to go 15% of my portfolio. So if I have a $20,000 account, I'm never trying to go over about 2,500 per trade. And when I say 2,500, I'm not risking 2,500. I'm doing 2,500 total. So I'm looking at like SPX contracts that are 2.5, and then I'll take 10 of them and I'll risk 20%. So then I'm doing a stop loss of about 1.9. And then that's going to be about $600 loss if I hit my stop loss. And if I hit it, I hit it. I'm not revenge trading. I'm not get that money back. If I took it, I took the out. And sometimes it's mental stops. I'll see like, okay, we're just ranging, trying to catch a break. And then sometimes I'll catch a break and sometimes I won't. And if I don't, I don't. And if I do, I do. Great. And trust me, my emotions are not as big if I win as opposed to if I lost. They're equal. Like, it's not like, oh my God, I lost, or it's, oh my God, I won. It's just like, okay, I was right. Great. Okay, I was wrong. Oh well, on to the next one. And then that's it.
Appreciate you for answering that. I just like, I mean, you know why I answered. People hear about these withdrawals and they think, oh, he's sizing 5,000, 7,000. The thing that me and Emilio, we like, I think this is one of the first things we ever talked about when we started texting each other is like risk compared to just making money. Like, I'm always curious how much people are putting into a position compared to how much they're actually risking in the position. Because if someone's sizing, say, $5,000 on a $20,000 account, that's the same equivalent of putting in, say, $50 on a $200 account or $500 on a $2,000 account. Like, that risk is exponential if you can't comprehend how to sell early for a loss, accept the fact you're wrong. Like, it's just like the title of this entire class I'm gonna be talking about. We're trying to be consistent long term, sizing appropriately, repetitive sizing that matches the account size, not, oh, I think this is going to go big today. I have to size heavier. Oh, I'm not too sure about this. So I'm going to dumb down my sizing just slightly so I'm not as heavy in. That's the right route to go every time. You never want to have that idea of, this is going to be the play. I have to size into this because the one time you do it, you're going to wish you never touched that trade to begin with. So many people get caught up in that mindset of, oh, this person just made 1,000. You may only have a $500 account. You're not going to make $1,000. And if you do, you definitely did not plan to make $1,000 on a $500 account in one day. It just happened. Now you have $1,500. You're going to size heavier to try and get 3,000. Eventually, that's not going to work. And then, I mean, I've been in the situation. I'm sure some people listening right now have been in the same situation as well. Losses destroy you. It's not the fact of what you're risking. It's just you don't have the balls or the ego to say, I'm wrong and I accept that. I have to get out because I'm not trying to make money tomorrow. I'm trying to make money 5 years down the road, 10 years down the road. That is a long ways away. And luckily, this is going to be stuff that we're going to talk about. Compound interest. Everything that I talk to you guys about, and this is a topic that it gets annoying for some, and I get it. That's the whole point. Trading is not supposed to be energetic 24/7. It's stressful, it's draining, it takes time away from stuff that you may want to do. But if you truly love trading in general, just watching a screen, watching charts, not even trying to make money, but just showing up every day because you love the idea of what could be possible in your life, if you understand where you could be a year down the road, 3 years down the road, 5 years. It's not the fact of this is going to take X amount of years. Once it clicks and you find a system, that money comes in without you even thinking about it. You're playing a chart, you're sizing the same. Like Emilio said, you get a breakthrough sometimes. It's not the fact that you held and it just happened. You left a few runners. Those runners go 500% without pulling back to your stop loss. Things happen for the better, but you can't let those 500% wins draw away from the fact of, okay, I have to sell at 20% today because this may not work out. There's always that what if. Why not think about, let's do this instead? Like, I'm going to do this. The whole idea of hope, what if, if even, what if this happened? You can't think anything like that because end of the day, this is your money. No matter how you get your money to fund an account, you worked hard to get that money to try and grow it. No one's going to tell you how to trade. We're going to show you how to do it, but you have to follow your own system. You can't oversize. You have to sell when you're content. You can't hold too long. You choose what you're making with your decisions. We're just trying to guide you. And the fact that I'm teaching the mindset should show you I truly care about what you guys do from here on out. I could easily just show you trades, show you systems of play, patterns. When are you really going to sell though? When are you actually going to understand I can't hold this much longer because my account is going to take a hit? Not even the financial standpoint, but your mental. Knowing that you lost $500 on, let's say, $1,000 account, are you going to focus on I just lost 500, or the fact of now I have to get back my 500? Because for me, all I'm focused on is tomorrow's a new day. My account's at 500. I don't care where I just was. Same way if you win. If you make $500 on $1,000 account, you shouldn't have the idea of, okay, I made 500. I could risk about 500 because I basically just started with $1,000 anyways. Every dollar you make is not promised. So as you grow, as you compound your account, you have to take those base hits because, like Emilio said, like he doesn't size 5,000. He doesn't 10,000, 15. He's sizing proper, and it's like I tell you guys my little slogan: money is always going to follow. Percent gains are going to correlate. As you size proper and your account grows, you're not sizing heavier from a percent perspective. The money is just growing with you. And when I tell people that, it's like, well, how do I trade and not focus on the money? Why are you trying to make money and that's your only objective? Because then you're going to be chasing, you're going to be hoping for bigger outcomes. You're never going to be pleased with your success if all you want is more money at the end of the day. So coming to terms with compound interest, taking $100 days. It's like what Emilio said about Hassan. If he makes $2,000, he's not going to think, man, this was a horrible day. Yes, he makes 30,000, 80,000, 50,000. But making any money, that is the point of what we do. Green is green. Period. That's it. So when looking at compound interest, and I do these calculations with you guys, and I'm sorry if it gets annoying, but you have to realize if you can just grow your account, we're talking on a monthly basis right now. I don't care about 10% account growth in a day, 10% in a week. Let's just focus on the bigger picture that not many people think about because they want that next day success, that next week success. Let's just focus on a monthly basis. And we're not going to, like the last time I did this analogy, we did 30% account growth. Let's just do 10% account growth in a month. So when we do this, I want you to realize, I know at least, I'd say probably all of you, if you've traded before, you've made at least a 10% gain on your account within a week. And maybe you didn't keep the money, or maybe you've done it in a trade before. You size, let's say $100 on $1,000 position, it goes 100% and you sell that one contract. You just made $100 in a day on $1,000 account. You just made 10% account growth in one day. Imagine just doing that in a month, selling that $100 position for $10 on Monday. You do it again Tuesday, Thursday, Friday. Okay, you traded 4 times that week. You made $40. You need $60 more to hit that goal if that's what you're aiming for. 10% in a month. What kind of bank is going to do that for you? Like, what actual investment from a financial institution can really give you that on a consistent basis where you don't have to do anything? 10%, you're going to have to work for it. But when you truly think about how small that is in a whole month, 2 years down the road, your account is going to be thriving. I understand it's not as quick as you may want it, but just think about the idea behind this. And of course, I got to pull up my calculator. I can't do this in my head. So let's just take this from $1,000 account perspective, because I don't want to do no $10,000, 20,000. I want it to be realistic for some of you. And if you want, I'll even do a $500 account. So like, let's go to the chat real quick. Do you guys want to take a $500 account and do this analogy, or do you want to do like a $200 account, $1,000 account? Like, what's the center point for some of you? I'm going to wait for at least like 3 to 4 responses. Okay, everyone said 1K. That's perfect. So just think about this. 10% on $1,000 account first month. Oh my gosh, only $100. Like, that's nothing. What is $100 in a month going to do for me? Okay, well, I get that, but you're focused on the money. You're not focused on the compound, the long term of what 10% a month can do for you. So obviously the first month, it's going to look horrible. How much did you make last month? Oh, $100. No, I made 10% account growth. Tell that to a banker. No, you didn't. There's no way. 10% in a month. Low risk, no emotions trading. You're focused on the long-term goal. So if we take this, let me put this on the next page. So we have the first month. We understand the process. We understand what's possible. Let's take this out 12 months down the road now. And we're going to take the same $1,000 from the start. And we're going to do just 10% a month for 12 months. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Your account, after 1 year of just doing 10% a month, look at that number. Now, I understand from a financial standpoint, oh my gosh, I made an extra $2,000, $2,138. Do you not understand how big of a percent that is over a year time? It's about 210%. Well, if you want to be specific, we'll do this. I believe this is correct. Think about that. In 1 year, 213% returns. Okay, let's go another 12 months down the road, starting the next year. So we'll do 24 months now. 2-year process of doing this. Say you start with that $1,000. So at the end of 2 years, if you do this, so say you have the 3,100, whatever, you take that same amount, do the same thing for a whole nother year. 9,800, just shy of $9,850. Percent gains after 2 years. That's just, I'm going to do just under, because this whole number looks better, obviously. That's just under 1,000% account growth in 2 years. Now, if you're starting to realize the process, imagine 3 years, 4 years, 5 years. I know I've talked to a few of you in here right now. You're 19 years old, 21, 22. You could be a millionaire before 30. Just, I understand it's years down the road. Think about 5 years of doing this. Turning $1,000 into almost 10,000 in 2 years. I understand from a financial standpoint, it's only $9,000, dude. Like, that's not going to do nothing for me. Okay, well, are you really going to only hit 10,000 a month? You may hit 5% every once in a while. You may hit 50% in a month sometimes. Trades aren't consistent. Nothing is going to be repetitive every single time. The only thing repetitive is your trading system, the plan you have, your sizing, if you allow yourself to do that. If you stay on course, what you see on my screen right now can be reality for someone with $1,000 account. So taking this into effect now, let's just imagine you do 10% in a week. Yes, you don't want to force that, but just think about it. So week one, you make $100. You do 12 weeks, which is correlating to basically 3 months, basically. So in 3 months, you're up 213%. Let's say you do 24 weeks, which basically correlates to just under 6 months, half a year, 1,000% growth in 6 months, basically. So take that into a year perspective now. You're doing 1 year. Starting with $1,000 beginning of the year, you're doing 10% a week on this idea. This is when it gets serious because you have to comprehend what is actually happening. That's going to be hard for me to do. So 6, 24, 13, 14, 15, 16. So this is basically where you're going to be at. In a year doing 10% a week. Some people shoot for 100% in a day. They blow their account. Imagine doing this in 1 year. You're making a salary off of $1,000. Some people don't even make this in 2 years at their 9-to-5 job. And now I understand 10% a week, it's very rare. It's sometimes difficult to do, but just imagine just sizing properly, letting the charts do the work for you. This is how everything works when you just take your time. If you rush trying to do this in a day, one oversize, one red trade, the money's gone. And this is another thing I just want to type before I move on. Imagine having a $1,000 account and you lose, let's say $500 to make the math easier for me. You just lost 50% of your account. How much percent do you need to make back that $1,000 account? It's not 50% of 500. Your account has to double to get back that 500 you just lost. The idea of oversizing sets you back harder than taking those small steps forward. You lose $500. Okay, it was a 50% loss. To get that 500 back, to get back to $1,000, you need an 100% account growth at that point. You're taking a half step back to take a whole step forward. Just because, oh, I wanted to make big money. I wanted to risk it and try and get that big size. I want to get that big win. Focus on what people don't teach because, oh, I don't have time to do that. Oh, if you want to make money like me because I make 20,000 a day, you have to do this. Think about where you want to be and not where you just want to get to right away. The journey is so much worth it. You learn about yourself, you learn about money, you understand how to keep money and not just make it. Anyone can make money in the market. I know you guys have heard this saying, but no one can keep money. Anyone can throw money in, make 5%, but are they really going to keep that money a year from now? Like, honestly, if even a week, if even a day, most people can't do it. And they think it's a fugazi scheme. It's not possible. You have people you're watching do this every single day. Like we do this for a living, for a side job, for income to pay the bills, to help with savings, to help family. We do this. We're not just teaching you, trying to get stuff out of you. You're here for free. You're not paying for what you're listening to right now. So why would I BS you with this kind of information that we're looking at right now? This is possible. You just have to play the chart and let that stuff size the way it has to. How often do you pay yourself / reset the account? So it's not like a monthly, weekly, or daily basis. The way I personally withdraw, if I have a big win, and I'm talking about like the way I look at big, 2,000 a day, 1,000 a day, I'll just withdraw it. The reason I withdraw, if I'm able to make $1,000, let's say on a $10,000 account, what is that extra 1,000 going to do if I don't size my whole 10,000 in a day? I still leave buying power after the trading day is over. The very next day, I have the whole account to use again. So why do I need extra money in my account to trade if I don't even use what I already had before that massive win? So when I have big wins, I withdraw. At the end of the week, if I'm up, let's say I usually hit between 50 to 100% account growth every week, I withdraw back to where I was on Monday. Not because I don't want to lose my money. That money is not mine until I put it into my savings account, my checking account, whatever it may be. because people make money, they just can't keep it. That's why when people withdraw, I have the utmost respect for those people. So many, they show these big gains, no withdrawals. Sometimes they won't post or they won't talk for a week or a few days. Do you really think that person's just not trading? Maybe they lost, they don't want to show you the money they just made, they threw it all back into the market, but they didn't withdraw it yet. People that show withdrawals, they are really doing this. That's why when Emilio posted that withdrawal, he told you this wasn't overnight. This was 3 years in the making. I'm still trying to get back to what I already paid the market my tuition. Everyone's trying to do that. No one just makes money out of nowhere. People can trade and make money, but who's really paying to themselves for all the hard work they put in? So you would size 5 or 10% for each port. So for me, when I size, it's always based off the chart. Is the chart looking good? Is this a setup that for me, I have an 8 out of 10 hit rate? I'm always going off probability, and that's how I determine my sizing. If I'm not confident, because let's just say the market conditions are weak, if the market's weak, it's choppy, you're not going to size normally. You're going to size down because you understand we're in a range. We've been ranging for a month. Why would I size how I used to in a bull market? You have to be aggressive when the market presents what you are comfortable with. When you're uncomfortable, don't size the same. So for me, my average sizing, depending on the setup, but let's just say a normal day, I'm going in 15, 10%, 20% around that area. Some days I size 2%, 5% of my portfolio. If I'm feeling confident, we're in a bull market, we have a pullback to a heavy zone I know is going to hold a support. Yeah, I'll size heavier, 25, 30%, maybe even 50% of my port, but my stop loss is so much tighter. The more I risk in a trade, the quicker I will cut for a loss. So if I'm sized in, let's say $1,000 hypothetically, my normal sizing is 500 with a 20% stop loss. So I'm risking $100. If I size 1,000, my stop loss to correlate has to be a 10% loss. There's no room for error. So my pinpoint entry has to be very, very precise. You have to trade with the market conditions. Don't trade to make money. If the market's iffy, why are you sizing like how you usually do in a bull market when you're very comfortable? You have to trade what the market gives you. Mr. Trades. I never used to do this, and now, oh, Coco, yeah, withdraw, always withdraw. I never used to do this, and now that I do, it makes me work harder and helps me preserve capital / rush in the trades. There's times I hit my goal for the week and I just chill because I don't want to risk profits. Nothing wrong with that. Set a goal and then F off. One thing that I've been teaching Coco over the last year or so, and this is something I didn't do for probably 3 years into my trading career, I would never pay myself. I would have rather seen my trading account grow than see my bank account grow, because having money to put in the market, like if I have a losing trade, I still have money to trade with, though I can make that money back. I was never paying myself along the way. So eventually when I'd make 5,000 in a week, 10,000 in a week, it would slowly diminish. And as you lose money as a new trader, you size heavier to make it back. And you should know how that goes. People have been in this situation, I'm pretty sure. So when I tell people, okay, let's say you make $500, are you going to use that 500 the next day to trade? If you're not going to touch that 500 because you have enough buying power, withdraw your profits. Write it open the next day, withdraw your profits. If you have a $1,000 account and you only use, let's say 300 to 400 a day, and you leave 600 buying power, any money you make, you should be withdrawing. What's the point of keeping money if you're not actually going to utilize it? And I'm not saying, okay, well, if I made this much, I have to overtrade to utilize it. No, you don't. If you hit green on the day, like today, the trade that we all took in VC, I did not trade the rest of the day. Was there an opportunity? Yes, I could have chased puts. I would have made money regardless. Why would I trade again when I just made more than enough I would like to make in a week? There's no perspective there. It's just greed. So literally end of this week, whether there's no movement tomorrow, Monday at open, I'm withdrawing probably another 1,000, 1,500, not all my profits, but enough where it's like, okay, I did something. I'm rewarding myself. Let's go back into next week with a calm mindset. I don't have a lot of money to use, so I have to be very cautious. I have to be very precise with my entries. Paying yourself calms you down, and you realize this felt good. I want to pay myself again. I don't want to lose money. I want to keep making money and paying myself. As you withdraw, you realize making money is not what you want to do. You want to keep it and you want to reward yourself. That's the goal that I think everyone should take into consideration. So this question, I want you guys to type it if you want to, but how do you avoid overthinking the process? AKA, how do you avoid a year down the road? Like thinking I have to make money tomorrow. I have to be rich next week. What do you think you have to do? Everyone's personality is different. For me, I just have to realize I have to step away. I have to log out of my broker, but I can still watch charts. That's going to make me not forced to like overthink, oh, I got to get in before it's too late. The idea of understanding, if you guys want to type it in, you can. If not, I'm going to keep talking on how I feel about this to avoid the process with overthinking. Like, I have to make money. This journey's, I don't want to take 5 years to be profitable. I want to make it happen this year or this month. Understand when you put pressure on yourself, like you want to hit this goal, as that goal gets closer, do you really think you're just going to say, okay, it didn't work out, let's add on an extra year of time? Or are you going to be thinking, I got to hurry up, like I'm not going to succeed if I don't do this, I'm a failure because I didn't stick up to what I told myself? You can't have goals with trading. The only goal you should have is not with money, not with percent gains, but the idea of, I'm just going to last in this market, I'm going to size proper, I'm going to do what the chart tells me. Money's going to follow, percent gains are going to correlate every single time. And when you overthink a loss, overthink a win, oh, I'm unstoppable, I can size heavier, oh, I'm down 50%, but last time I was down, it went back to green, so I'm just going to keep holding. You can't let past results affect your future journey, process, whatever you want to call it. That's just the way of the game. So Nick said, enjoy the process, money will come for sure. If you enjoy what you do, you don't care about results. Obviously, the results are nice, but like I've told you guys in this in VC in many classes, whether I win, whether I lose, I walk out of my room, I walk out of the office, wherever I'm at, I'm smiling because for one, I have the chance to trade tomorrow. If you full port, you have no portfolio, you're not going to walk out smiling, oh my gosh, I lost 10,000 out of my $10,000. I feel amazing. No, you're going to be shitty, bro. Like you can't trade now. What you like to do, you're stuck. How am I going to get this money so I can trade it? Now you're overthinking the process. You're struggling. When you get money back, you want to make back what you just lost. You can't do that. So when you enjoy the process, money comes. It honestly does. Whether you win, whether you lose, you learn as you lose, you learn as you win. There's no like, oh, I lost, I gotta just whatever, I'll figure it out. No, you're gonna you're gonna sit down. What did you do wrong? What emotions did you have? Did you oversize? What was the purpose of why you entered? What was the risk before even entering? Breaking down why you lost is going to help you so much more. And that's a part of the process. Knowing the market has endless opportunities. For anyone that does not understand, you don't miss a play. I hate when people saying, Coco, I already know you're sitting there smiling. I hate when people tell me, oh, we missed it. You don't miss anything. Nothing. I guarantee there's going to be a day in the next 5 years where the S&P drops or goes up 150 to 200 points in a day. If you prepare, you may not miss that. But if you do miss it, it's going to happen again. You just have to be prepared. You have to have money to make sure you're ready for the opportunity. Oversizing and make back an opportunity you missed out on, nothing's going to happen. It's not possible. SP said, I stop overthinking, remember all my losses, and realizing if I blow this port, I'm probably going to get a real job. Some people, that's motivation. If I blow this port, the only way to fund my portfolio, I got to go, whether you have a job, work overtime, work more hours. If you don't have a job and you're working around the clock, you have to get a job to get that port back. People use that for motivation. I can't afford to lose this money, so I'm going to be very cautious with what I do when I enter. How much market tuition did you pay, Breezy? So one of my homies is in here, a shoebox. I've been helping this guy since the penny stocks, guys, since 2018, 2019. My tuition at the highest peak was roughly, it was around what Emilio was, about 52,000, 55,000. And this was totally avoidable. But I would focus on, I'm down this much. I've lost this much. I'm not going to settle for $100 days because I've lost thousands in a day before. That's so lousy of me. So when I realized, like I told you guys earlier, this right here is what saved me. Big wins happen. I mean, I've had $10,000 days. I've had $20,000, $30,000 months, but realizing just take the base hits and those big wins will come. It saves you so much emotional stability that you may not be able to handle when you're put in that situation. So for me, I don't even care about how much I lost. I mean, at this point, I'm fine. but in the moment, it was horrible. So just not letting past results affect how you're going to react in the future, that's a huge thing that you have to overcome. So what makes a trader unstoppable? And the topic I'm going to be talking about next is basically the answer. You have to accept the losses. Most people think, oh, if you're unstoppable, you win every time. You're not going to win every time. I know so many traders, close friends that I talk to often, they lose, they don't talk. They go ghost. They just sit in their silence. They don't figure out what they did wrong. They want to take a break from trading. If you understand, if you can't accept your losses, you don't deserve the wins. I don't care what anyone says. I hate people that lose and they just don't want to speak up on it. You only learn the most when you lose, whether it's trading, in life, with family, friends. Mistakes grow you as a person, no matter what you do. And if you want to fight me on that statement I made, I'm all for it, because from my personal standpoint, and pretty sure everyone that's successful in life, you don't learn as much when you win, because eventually that winning thing's not going to work every time. There's always something to tweak when you mess up or you lose. That's when you become unstoppable. Those losses you have to fix, because if you don't fix a loss, no repetition of change. You're going to keep repeating yourself every single time. So understanding you have to accept the fact you're going to be wrong. You have to confront those red trades, those bad days, those emotional thoughts that you may have that you don't want to put in front of you. You have to do it. As much as you may not want to, you're going to have to do it at some point. So I am going to, as I pull up my Weeble for some charts real quick to show you guys basically how to be consistent with charting on the larger time frames, like basically putting yourself in situations where stress is lowered and you let the chart make the money for you. If you want to type in some questions real quick for me, I will answer them as this gets loaded up. Any questions about what I've just talked about before I get into charts, showing you guys the money perspective of how to make long-term success be consistent. That's what I'm going to be showing you guys. Do you average down? iPhone 68, you're on direct message. I want other people to see what you're saying. So switch it to everyone in the meeting if you don't mind. But basically he just said, oh wait, other people said stuff. Reezy, do you have a max amount of trades you limit yourself to? So it's not usually a trade number. If I have, I mean, my close buddies that are in here know this. If I have one trade that's green on the day, 200 bucks, 300, I'm usually done. I'll stick around to help people. But when I hit a trade, like think about it. You go out on a basketball court, a sport, golf, football, whatever, you hit the game winning thing. And the other team's like, hey, run that back, double or nothing. Why do you want to prove that you just won when you just did it? Why do you want to do it again? Is that an ego thing? Do you have to prove to them, oh, I won this? No, you already showed them. I already won my first trade. Why do I want to try and do it again when I'm done for the day? That's it. End of story. And I feel like a lot of people fall victim to that. They want to trade again. They want to try and make more money. Why do you have to prove yourself? One win, that should be the end. So for me, win or lose, I usually adjust to what happens in that situation. For me, if I have one green trade that's first, I'm done. That's the end of the day for me. When it comes to actual number of trades, say the first trade I lose, second one I win, third one I lose. At that point, it comes down to how much have I lost as I've been doing this? Can I afford to keep trading? So I know I'm kind of beating around the bush with that question. It's not about the number of trades. It's more so execution. Was my execution good enough where I'm not upset if I quit right now when I lost? My execution was good. The setup was there, but it just didn't work out the way it should. Do I want to try and force another trade out of me winning, or just because I trust my instinct? The chart is showing an entry point. The chart tells me what to do. But if I'm green on my first trade half the time, that's usually it for me. Do you average down on a trade? I only average down if my initial sizing was prepared for it. So say my average sizing, let's just say $500. If I start a position $500, I'm not averaging down. I don't care what the chart looks like. I don't care how excited I am that this could work out if I add in more down 20%. If my normal size is 500, I will not average down. Now, if I start a position, say 150 bucks, $200, my average sizing is 500. I can afford to put in an extra 300 because that is my plan. That's what I stick to. That's my consistency on sizing basis. That's how I determine if I average down. I will never average down if I sized in normal right off the get-go, because at that point, the way I look at it, You're sizing in. If your initial thought process was wrong and you're red, why are you sizing in where you first told yourself, this is my entry, I'm trusting this entry? Why are you sizing down if that entry did not work out? You're basically doubling down that, okay, I wasn't right the first time, but I'm going to be right the second time. I don't truly believe in putting myself in that situation, not because I don't trust it, but because I didn't prepare for it. And at that point, my risk is different now. My sizing's heavier. The potential of my, like at this level, I'm going to sell for a win. My average is coming down. So the whole plan I had before entering is out the window now. Nothing is what I planned for. So now I'm going to be emotional, possibly. I'm going to be like here and there, not knowing what to do. It changes the way you look at a trade, not just the money standpoint, but the way you actually are going to process what's going on. I do 20% stop loss on other tickers, but 30% on SPX. It makes a difference in my trading. SPX has a lot of momentum, so it's very important to understand having a wider stop on SPX is important, but if you do size heavy, you have to keep it the same half the time. I've been reading every good trading book there is, old or new, and a lot of key elements remain the same. Everything that works is never going to change. All these new systems you see, marketing tactic, I don't know. It's all about the idea. What's the average RR you look for? So RR going into the trade, let's say I enter the trade and it goes green right away. My loss, let's say I enter at 1.0 and my risk is, let's say 0.7. So I'm risking $30 a contract. I try to stick to like what Hassan does as well. I want to at least have a minimum of a 2-to-1 ratio. So if I'm risking $30 on an $100 contract, I want to trim minimum at 1.6, $60 profit. So my risk is 30, first trim or all profit is at 60. If I'm in a trade, like today is a perfect example, say that one entry, 1.0 entry goes down to 0.5. I'm down $50. I'm not going to hold for 100% gains. A 2-to-1 would be going to $2, 1 to 2. Going from 1 down to 0.5, I'm risking $50. Now I have to make 100. At that point, if I switch to green, I see if the chart's still holding the way it should, but I just want to get out profitable. Green is green end of the day. So don't think, oh, I was down 80%. I was in at $1, went down to 0.2. Now I have to make 1.6 for my profit for that 2-to-1 RR. Realize if you're down 80% and it goes back to profit, you just got saved. Sell it, break even, sell for a 10% loss, get the hell out of the trade. Don't focus on where you were, but where you are. Everyone focuses on, oh, I was down this much. Now I'm up here. Realize where you currently are from where you just came from. Don't think about where you could be. Don't think about where you just were. Process where you are in the moment when that stuff happens. Do you ever, yes. I always, so with the average down stuff, I always keep my stop loss, whether it's mental or solid. We can talk later, but if you have time to squeeze in looking at Netflix, I appreciate it. Yeah, we can, someone just mentioned charts. So I'm going to pull up Netflix since I'm going to show you guys low risk, high reward stuff. I found go half port and saving half for average down has been helpful more times than not. Literally, yes. If you usually size $1,000, go in 500 and then you can size down 500 more dollars if you think the setup is still valid. Don't size heavy your normal amount right away. Trust the fact, okay, I'm going to size light. And if I'm right, yes, I'll make less money, but my risk is minimized. I used to do that all the time. And I still do. If I'm sized in one contract, that's $200 and my risk is usually 1,000. I'll add in contracts because my normal size is 1,000. My starting position was only $200. So if I'm in 1,000, risk is 20%. Why not just buy one contract and let it go to whatever happens? Because if that $200 contract goes to zero, that's my normal risk with $1,000 position sizing. The correlation is what matters. When I'm down 20% on a trade and premium climbing up, I'm now down to less than 2 to 3%. Do I average up? This is a good idea, please, though sometimes it is dumb. So the idea of sizing down, yes, your average comes down, but you also have to focus on like sizing initially. Because your question is, I'm down 20% on a trade, premium is climbing up. I'm now down to less than 3 to 5%. Do I average up? Well, I do average up. Is that a good idea? It's fine for you to average up into a position, but why are you not sizing heavier at your initial entry point? That's one thing I personally don't really comprehend with people. And I get it. But if you're sizing, say $1,000, your normal sizing, you're up 5% and you're thinking, okay, well, I'm going to size heavier because it's holding. Why not just go heavier if you were just red, or go heavier when you first entered the position? That's one thing for me. I'd rather sell my initial starting size and then roll up on the contract, use profits and roll up. That's what I usually do. Is market correction starting? Not 100% sure, but I think as of now, we can take that into consideration that the market is starting to filter out into different sectors. Rotation is happening. I personally feel tech usually dies down, consumer discrete usually dies down, energy, real estate, and financial sector usually tends to push when tech dies down. When money's taken out of one sector, it goes somewhere else. It doesn't just get sold and people keep in their bank accounts. They reprocess, re-put in the money in a different location. And we're going to see that in a few months, possibly, maybe even a few weeks. But I have a good feeling finance, energy sector, healthcare, industrial, filtration is about to happen soon with all this money being sold out of tech. If we continue to sell off, earnings next week will be a huge determining factor. Okay, so the last topic we're going to talk about, and I want to pull this up on my phone just so I say this topic correctly. I don't want to butcher this or anything for you guys. So we're going to talk about understanding calls at support, puts at resistance. And if you don't play calls at support, aka calls at the bottom, and then puts at resistance, aka puts at the rejection on the top, I'm going to show you how to work around, okay, if we break the downside and we recontest that level on a push back up, that support to resistance flip gives that conviction to go puts on the downside. You don't want to buy puts when the support breaks right away because you're basically forcing an entry on the downside. So I'm not going to use Netflix from the current area we just had, but let's just use some historical examples on how to make your sizing, how to make your entry points consistent for long-term success. First, you guys understand that we talked about proper sizing, understanding you're not going to hit home runs. You can't size 50% of your account. If you understand the risk, that's fine, but one lost, you're toast. So we're going to take this very simple. We're not going to do anything crazy with this. I'm just going to show you examples with what we see on the chart in front of us right now. So just a quick little idea for you guys. Breakout chasing for calls, perfectly fine to do, but you have to realize when you chase calls on a breakout, you are hoping for the zone that broke to continue with buying pressure. You're basically buying the top, hoping it keeps going. That's people's strategy. Perfectly fine. My strategy is different from others. And when I tell them what I do, it kind of throws them off a little bit. But let's just focus on one little aspect that I think you guys will see on a first example. So this is not a double top to the pinpoint, but the idea of price could not hold this level. We wicked here, pulled back. Next day, look at the support we held on the bottom right here. So we have a zone in this little aspect of Netflix right here. We have a resistance at the top. I'm going to make this orange. And we have a support at the bottom. And I'll make this blue. The idea of knowing ranges, understanding if you play anything in between, if it's stagnant, if it's sitting, it's a 50-50 opportunity of what's going to happen because it's ranging. We understand 413 a share is a rejection zone. We understand just under $400 a share, that's going to be a support to push it back up. So realize, okay, we came down, we pushed, same spot from the day before or 2 days ago, we're rejecting the same area. It's not a pinpoint, but just the zone is rejecting. We understand sellers are present in this area. We drop back down. Oh my gosh, we bounced again off the same 2 days ago bounce level. That's a heavy support. For me, knowing this as a professional trader or just having years in the market, this is when my conviction comes in. I'm not buying because I'm going to make so much money. I'm buying because, okay, we've held this level before. Buyers step in. I trust this level because of historical analysis. I'm going to buy calls. Maybe I don't want to size my normal $1,000 position, so I'm going to size just $200 to get my feet in the water. Imagine sizing light at a bottom here. Trust the move. You're not selling early because you trust it. Within a day, Netflix pumped almost $27 within basically 1 day swing. You bought at the support calls because you understand buyers are present. This is a low risk, consistent long-term strategy. If you size light or just size in for your position, You understand, you're trusting the chart, you're trusting the zones. You're not saying, oh, this has to tank. I'm going to get puts. We're at the bottom again. That's a classic retail mindset. You have to realize market makers trade to make us lose. They don't trade to make money because guess how they make money? Making us lose. Their objective is to make us lose and the money's going to come. So they do all this resistance reject. They know retail's going to chase a breakout. They're going to send it right back down. Do we have breakouts and we keep pushing higher? Yes, we do. A lot of people chase and they get screwed if that does not happen. And right here's a perfect example. So for me, if I want to buy calls and I miss the bottom here on this blue highlight, we break out. I look for a pullback to the historical resistance. Because historically, if we're rejecting from heavy sellers, once we break above, guess what happens when we come back down to that level? Buyers are going to step in. Does that everyone comprehend that? Resistance flipped to support. Before there was heavy sellers compared to buyers. Now that we're breaking above, buyers took over. When they sell off, people that missed this initial breakout, they're going to load in on the pullback. Trading on change of character. Buko, what do you mean by trading on change of character, if you don't mind? Reason the economic. I wouldn't say I'm not smart with this stuff. It's just as you trade over years, you see stuff. Money gets filtered into other sectors. It's natural. That's just how it works. So I'm gonna keep talking while he answers that question I asked. So now this is how I process. I'm a patient trader. Everyone knows I'm a patient trader. Everyone should know this. If you don't know this, you're gonna get used to it. This breaks out. Do you really think I'm gonna buy calls? Where's the resistance? Is there any resistance? We have to go to a larger time frame to find that resistance. So just so we know where the zone is, I'm going to highlight it white. I'm going to go to the daily chart. Look at the white highlight. Compare that to this stuff over here. Last time we broke above that level, we rejected. Massive gap fill from earnings drop. Focus on the rejection when we try to push up after the earnings drop off. We rejected and came down. Now watch, I'm going to put a level around the top of this just so you can see how this stuff correlates. Let's put a level right here. I'm going to make it purple so it stands out more. Let's go back to the current time frames, back to the 4-hour. Look at this. It's not dead on, but if you understand historical price action, historical analysis, why would you buy calls up here when you know historically anywhere in this area we have rejected before? What makes you think buying calls here and not buying calls well before that happened? Why is this a better situation for you? Is it the fear of missing out on a bigger move? Is it the idea of, well, now I see the move? Every push has a pullback. It may not happen right away, but look at where this pullback happened. Does this level look familiar to you guys? Look at that. Do you really think market makers or whoever did this pulled this back for no reason whatsoever just to push it back upside? They know what to do to freak out retail. Retail chases, they sell it off. By the time the momentum hits, retail's thinking, I got to get puts. You need to know when to enter when retail is fearful. You buy when they're fearful, you sell when they're chasing. That is how you have to play this game to make it long term. And sizing is the biggest part of that. You're not just going to trade and make money. Sizing consistently, sizing appropriately. You have to understand what you're doing. Buko said you were talking about how your game plan is to play for bounces and zones. Would that be trading on change of character? So I wouldn't say change of character because you're basically going off levels. I think I get your question. I'm not going to change the way I feel about a position or an entry point just because of how the chart perceives itself. When I see a level, I trust it. I'm not saying like I have to get in. I have to do this. I am the type of trader that goes off price action and levels. I know a few other traders that are very successful that do the same thing. I don't read tape as heavy as most people, but tape is some people's, for me, my levels are some people's tape. For other people reading tape, that's how I look at levels. I have my strong suit. So it's not more so breaking character. That's just who I am as a character, is like playing the level. I think that's what you mean. And if not, please correct me. Oh, smart money concept. Yes, 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 yes. So forgive me, guys. It's very hard for me to, in the moment, think of this stuff. You were talking about how your game plan is to play. Hey, Buka, we're going to have to talk after this, buddy. Yeah, I mean, I know if we took extra time for me to understand, it's hard for me in the moment when I'm focused on like a topic to try and process something else, if that makes sense. I think he means change of character as in smart money concepts. So when playing this, I'm focused on like that low risk, if that makes sense to you guys. The idea of I got to be patient. The breakout happened. I usually want to get calls where people are thinking this could sell off. I'm buying when people are fearful. I'm not saying this is the only strategy. I'm teaching you what I use. This may not work for you. This may be something you look into. But the one thing about charts and trading, all levels happen for a reason. I mean, looking at Netflix today, do you really think that we stopped at this area for a purpose? I mean, look at that support from the wicks before earnings even happened. These wicks came down, got bought up. Wick came down, got bought up. We're currently at that level. Netflix could bounce. Obviously, it's like it may not, it could. That's where risk and sizing appropriately comes into play. Do you trust it enough to size normal? Is this heavy sell off kind of like I'm just going to put in a little bit to see if it works out. I don't want to size my normal position. You're adjusting to the market, like I was saying earlier. If the market condition or the chart you're trading is not what you're used to, but you think the setup is valid, you don't have to just not trade it. Just don't size as heavy. Because if you're sizing 1,000 to risk $200, why not just size $200? And then you can hold the chart if it does come down. Maybe it drops down through this level a little bit. But then, like a day or two later, if you have an extra week on the contract time, what if it sends? You can hold that $200 position. But if you had a $1,000 position and this is down 50%, you had to have sold before that drop happened because your risk of 20% loss, aka $200, was hit. You have to stick to the system. So for me, just trying to sum this up for you guys so I can answer a few more questions. Change of character as instruction, but you answer it in the way in the beginning, saying you don't play for the breakout of the zone, you wait for the pullback. Yeah, so going off what you just said, this is like the reversal idea. A lot of people play the breakout. I play the breakout in the recontest, and this orange highlight is the perfect example for how I trade. I'm not saying all traders do this. A lot buy the breakout and hold for continuation. When I miss, my miss is this blue. This is my missed call entry because I know, focus on the blue back here. We broke above, yes, we pulled back. This was a rejection. Anywhere in this area was a rejection. I don't want to pinpoint it to a small zone, but just focus on the overall wick pullback held right here. This blue is going to hold support. So I'm entering light, or maybe I trust it so much, I'm going to size normal and just trust the move. This is going to hold support because that's my ideal entry for calls. If we break out of orange, that's me chasing. For some people, that's their indication of buy calls. My calls are down here. When most people are saying, if we break this level, I have to get puts. If we break this level on the downside, I buy puts on the recontest of the break. Support to resistance flip on that charting. Then I buy puts here, then we sell off. Because then if I buy puts here and we break upside, I can sell right away. If I buy puts on a break on the downside like this, I know it's pre-market, but just the candle is a good idea and a good example. This green candle, imagine this was at open, drops underneath. Oh, I got to get puts before it's too late. Shoots right back up. I get the candles green. If you guys understand candles, this is a horrible example, but just the visual. Broke underneath this blue highlight. I got to chase puts, shoots right back up. I wait for a break. I wait for the recontest of that zone. If it holds and consolidates, my conviction to get puts is way higher now. So I'm buying puts because we held this historically with buyers. Once we flush through and then push back up, I'm expecting sellers to hit because that was a historical buy zone. Now it's a sell zone. People that didn't sell on the break the first time, they're going to sell when they have a second opportunity. Vice versa for the upside now. If I want to buy calls, we broke the orange. We pulled back slightly. Would I enter here? Possibly, but since we didn't actually hit where I wanted, maybe it's a light position since this wick a few days back did hit in that area. But the real entry point for me, this is when patience comes into play. I'm waiting for the chart to pull back to where I want it. This is where I'm entering my calls. Breakout of the zone, and then we pulled back to show buyers were present. And if you know my strategies, look at this cup and handle formation. Hold up, started to curl. We had a bearish trend, but I know my support is coming. Historical resistance flips to support. I trust the level. Now I watch for trends to flip bullish, making higher highs and higher lows. This is my conviction to hold as trends form. I'm trusting the level, whether it's size and light, size and normal. That's when, as you use a system that you find comfortable with your personality, don't size heavy right away. Because when you're trial and erroring something, you don't just go heavy like you usually do on a system you're comfortable with. You have to test it out. How many times am I winning? How many times am I losing? How many times am I up 20% green, but I don't sell? If you are up 20% 9 out of 10 times, but you're red overall, you need to sell when you're green because at that point, 20% 9 times out of 10, that one loss is not going to affect you. So journaling comes into play. For me, I just trust my levels. Breakout, I'm not watching Netflix at all in this whole time. I'm not watching it, not watching it. Okay, we're pulling back. At this point, it has my eye now. Let's see how it reacts when it comes back to my historical resistance, which is now a support level. As it pulls there, I see how it reacts. If I trust my analysis, I enter right when it touches on the 4 hour, the 1 hour, whatever that may be. I trust my system. It's not a hope because this is what I do. I trade this way. All my trades are this way for everything. On the 1 minute, the 5 minute, the 15, the daily, the weekly. That is how I trade. When you add levels to your chart, it's on the weekly. So I always chart on the largest frames and then work my way down. I'm not saying the yearly, the monthly. I chart usually, I start on the weekly or the daily, and then I work my way down from largest to smallest. Because the biggest thing I tell people, and I talk about this on the Sunday night charts that we do, none of this stuff matters down here. None of this matters. It's all bullcrap. Why should this matter when it has to break all these levels to get down to this area? But if I'm on the daily and I come back, look at this. Look at all this support. Yes, it was down a little bit, but just focus on wick pushed, wick pushed, wick pushed. Everything was a fake out. This zone around 480 was a heavy support historically. What makes you think that won't be a rejection in the current times? Holy crap, would you look at that? We rejected around 480 right before earnings. Coincidence? I don't know, but that's why I use historical analysis. If I only look at the 15-minute, I don't see anything reasonable. All I see is, let's go to the hourly. Holy crap, Netflix is just holding. It keeps making higher highs, higher lows. I got to get in before it's too late. I go to the daily chart. Why would you want to buy calls right now? Historically, it held support. Now it's going to reject. That is how I process my charting. I start on the larger frames and I work my way down. If a chart is at a rejection on the bigger time frame, I'm looking for puts moving forward, not just right away. You need conviction before you enter with how I trade personally. If you have a strong level, a strong daily level, do you drop down to the 15-30 minute time frame to enter? And if you enter, is it a swing? Also, what levels would you use for intraday trades, 4 hour lower time frames? So when I'm trading anything in general, all levels correlate on every time frame. I mean, if we look at this purple level at 459, let's go down to the 5 minute. Pre-market, I understand you can't trade pre-market with options, but just focus on the zone around 459. Pre-market couldn't break. We tried to push, rejected. This whole area is rejecting. And this was here because of what I showed you on the larger time frames. Try to push off open. Yes, it's slightly below this level. Couldn't break. Okay, we finally broke out. Notice how we started to slowly consolidate. We had straight uptrend, 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 massive green, pulled back and curled right around this area. That's why I'm always talking about zones. And I always tell you guys, don't chart to a pinpoint, to a 0.68, 461.48. Focus on the zones with the levels because they all come back into play. That's how you limit your risk and you maximize your reward. Charting levels, price action always repeats itself. So at this point,